Alright everyone, welcome back to another video. We're going to be covering the AMD model today, so the accumulation, manipulation and distribution. People also call it the power of 3 or the Judas Swing. That's specifically when it occurs at 9:30. We're going to be covering what they all mean. There's a couple differences in them and why sometimes we'll call it the power of 3 instead of the Judas or the AMD. So the first stage of the AMD model is obviously accumulation. Now accumulation will happen in a consolidation because price is not leaving the range and it wants to stay at this price or this price range to accumulate more orders. So it's really easy to see when price is accumulating. Literally just look for consolidation, look for it to stay within a close range, and then you can use that to frame the manipulation. Obviously next up we have the manipulation. So price leaves this range, we're going up, obviously counter to the trend that's actually bearish for the day. This is manipulating. Now the manipulation leg is the most important leg, and once you understand the manipulation leg in trading, where price is going to manipulate, where it might manipulate to, it's really important in order to find, high probability setups. You're able to capture a larger range than if you just trade normally. And the reason why it happens again and again and again, it's a recurring process, it will happen all the time, is because this move, people will see this as a breakout. They might take this 15-minute fair value gap, they're buying, they think it's broken out of this range, it's going up, we're going to carry on going up. It also stops out people that are selling early on. So here, a lot of people that had the right bias, they see prices starting to trade down, they're going to target this low, for example. So they're taking this trade here, but they're stopped out early. So early sellers are stopped out and it entices buying. And then obviously when we get this reversal here in the distribution phase, any people that are buying, their stop loss likely going to be around here. So they're going to be stopped out immediately as well. And then that generates more liquidity for the larger hedge fund traders, because obviously they are ordering, thousands of orders a day. They're putting millions and billions of pounds into the markets and they need a larger pool of liquidity in order to get in. So that's why it does it. It opens up more orders to help people get into the market. This will always happen straight after the manipulation. It's normally a quick, clear move. Price ended up coming down, taking these lows. So looking in deeper, we're going to load up this chart on the 1 minute, as you can see here. Price, this is the 9:30 candle, this big drop down. So you can see here on the 1 minute just how big this consolidation was. We've broken out above. Now this is our manipulation phase, and I will always encourage people to take trades from within this range if they can, because this is going to be able to capture the largest range of movement. And if your bias is correct, you're going to be able to catch a much larger move than if you were just, say, to enter down here or something. So always have this zone mentally marked out in your head. I know that I'm going to be looking for trades around this area, and even, ideally you'd take it above this high, because this is another form of manipulation. We swept buy sides and then we've immediately broken down on the 1 minute. I actually entered up here. We created this balanced price range. So price doesn't need to return up here. The candle closed bearish. That was my entry. You've got a really nice entry here off the immediate rebalance, the wick to balance price range, and then you trade down. There would be other setups on, say, the 15-second that you could have got in here, but again, your best opportunity comes within the manipulation leg. Now going on to some more current charts. This was the 28th of November's trading day, or the 29th AM session, New York on the Nasdaq. We're going to be looking at the open, high, low and close of a candle now. This is also a way you can frame your power of 3. I'm going to go to the 4 hour quickly. As you can see here, you've got your open, your low, your high and your close. Now these are all important references when you're trading in a trend continuation in order to capture a good setup. So we've got this, as you can see here, this is the 10 o'clock candle. The 10 AM power 3 is a crucial tool used in ICT traders sort of knowledge. The reason being is if you've already seen a reversal like we saw here in the morning, by 10 o'clock price is likely going to be distributing on a good day, and you can use this framework in order to try and find some setups, and we're going to show you how it worked in today's trading. But just studying the candle, on a bullish candle you've got the open, so this would count as your accumulation. Now at 10 o'clock, as most of you know, price is unlikely to be consolidating and accumulating orders, it's more likely going to be distributing, but you can use this drop down, this sort of manipulation leg, in order to find some optimized entries. So obviously the high, this candle ends up coming up, distributing up to here, nearly taking up this high. But yeah, we're going to be looking into this little leg here. If we go down onto a lower time frame, this is a 15-minute, this is our manipulation leg, and we can use this to find entries. So we're going to give you 3 examples in one trading session for you. 10 o'clock, market started at this price to higher the box, and immediately we've traded down, retraced. The biggest retracement we've seen since another time, which is 9:45. We'll go into that in a minute. If you were to get in here, you would have got a 0 drawdown trade using the manipulation leg. Price immediately reverses and goes on to take buy side. And as you can see, this manipulation leg, and this is why I say on a strong bullish or a strong bearish day, you're looking for trades inside this manipulation leg, because on this run up to buy side here, there's no other fair value gaps you can enter. This one hasn't been filled, this one hasn't been filled, and this one hasn't been filled. It manipulates and it's likely to then move quick and strong. The manipulation leg is often going to be where you find your best entries. We're going to see that on lots of candles, lots of high time frame candles. You want to be buying in that manipulation leg. The next example is 9:45. This one's not as big, but we're going to show you anyway because it just shows how it does work, how timing is crucial. We've got 9:45 candle, all through 9:45 to 10, really we've moved up. When 9:45 opens, we move down. So at the start of every higher time frame candle is when you're going to expect a retracement. You're not expecting a retracement, you know, at 9:55. You're going to be waiting for just after 10 because it's going to need to do that manipulation for the candle. It's not going to go straight up. 9:45 again, that's the new 15-minute candle. As soon as it opens, we see this big move down, creating a bearish fair value gap. We then inverse that, form a balanced price range. So your entry would have to be here. There would have been an entry on the 15 second if you are into using that chart. But yeah, our entry, although we have to enter here, our entry was formed of a setup, was framed in the manipulation leg. We then go down to the 9:30 open. Again, this is our Judas swing. It moves down, takes out sell side liquidity, stopping out any early buys that are long in this move, and then it rallies up immediately. This is a manipulation leg. We'll just go into the 15 second for both of these charts. So as you can see here, we've got this inverse creating a fair balanced price range again. You could buy in when it taps into the inverse here, did it perfectly, shut up, 0 drawdown trade. You've got this one as well. Some people might like to use this one. Some people will only trade on the lower time frame the highest inverse, which is here. Again, inverses, trade into fully, and look how that look how perfect these setups are. So we've got this inverse, it's filled it out, literally 1 tick short, 0 drawdown. You enter here, stop loss at the bottom, and then you'll take profit up at the buy side. Also got this inverse, creates a balanced price range. Again, taps into the inverse on this candle to the tick, shoots up, 0 drawdown. The 9:30 wasn't as clean. Obviously price takes the sell side, forms an SMT. We then see immediate displacement back up. For this fair value gap, it's inversed it. You could have used this candle to enter with a stop loss at the bottom, which C wouldn't have lost. I entered here, I wanted a bit more confirmation. Traded down, I thought it could be manipulating lower after it reclaims this bullish fair value gap and then forms another one. I used that as an entry. I waited for this candle to start wicking back up. I didn't want it to inverse. That's a 0 drawdown trade. You could scale it all the way up to the buy side. So this type of trading using these manipulation legs is crucial in days like this where we were really bullish. After 9:30 we took that initial sell side and we just carried on moving up. Really big day, obviously all this range been taken out. On a day like this, it's a really nice day to get in trading. However, as you can see, if you were to look on this chart, especially if you were a beginner trader, you wouldn't see many opportunities. Now this is why this model is so important, and you can use it to find entries. Not only entries, but you'll find the optimized entries because you'll be buying in a discount on a bullish day. These 3 ranges are the only entries in this chart. There's an entry here, there's an entry off this inverse, and there's an entry obviously off this fair value gap, and you add this bit down below here. So using this model is a great way to understand when price is likely to retrace, and then you can frame a trade idea off of that time as well. So 9:45, new 15-minute candle, it's probably going to manipulate down at this time, and again it does perfectly. 10 o'clock, it's going to manipulate down, it does, fills in an inefficiency and then carries on up. So in a strong day where it's hard to get in, using these times just after 10, just after 9:45, just after 9:30, within the manipulation leg of the trade. So basically from the open price, any movement counter to your trade bias is where you should be looking for opportunities. In a day where you're expecting a large range day, you're expecting price to flurry quick, you need to use these zones. This way it will help you to find entries, because price is likely to distribute quickly. It doesn't need to retrace, it wants to retrace at the open of the candles. And like I said, on a large range day where price is going to be going heavy in one direction, it's going to retrace at these times. Price is going to use time to retrace, so you need to keep your eye out for these times, keep these areas highlighted, and this will be your best entries. But anyway, hopefully you enjoyed that video, found it insightful. If there's any other questions, just make sure to leave them in the comments. I will be answering all comments. Obviously I'm still a small channel, so I'm happy to spend my time replying to people. If you're looking into getting into trading, make sure to subscribe. I've got TikTok as well, Instagram and Twitter. I'll be linking them all in the description. If you've got any friends and stuff as well, anyone that's looking to get into trading or has just started, make sure to send them to this channel. There's a lot of beginner friendly content on here. But yeah, thank you for watching, and I'll see you on the next one.